So, good morning again, ladies and gentlemen. It's morning where I am in London, and so I wish you a good day wherever you might be. My name is Rishi Raithatha, and I work as a senior advocacy manager for the GSMA's mobile money program, which is based in London. Our session for today is entitled "The Role of Mobile in Scaling Index Insurance," and I am ably joined by a number of very knowledgeable panelists today. So my guests on today's panel comprise a number of familiar faces in the industry. In fact, if anyone watched the previous session, you might see a very familiar face, in fact. And now between the three of them, they've got over 35 years worth of experience in inclusive insurance. I, on the other hand, have about 35 questions on inclusive insurance, some of which I hope to ask today. So our panelists in alphabetical order are Pranav Prashad, who is the senior technical expert at the ILO's Social Finance and Impact Insurance Facility, Rose Goslinger, the CEO of Pula, an insurtech that provides index insurance across a number of sub-Saharan African countries. Rose should join us shortly, hopefully. And Simon Schwall, who is the CEO of OCO, an insurtech that currently offers weather index insurance in Mali and Uganda. I should add a number of interesting points about all three of our panelists. So just to give you an idea of all three panelists in a bit more detail, OCO, it was recently recognized as one of the top 50 most promising solutions to boost financial inclusion, and this was by Visa and MetLife, if I'm not mistaken. Pula recently partnered with the African Risk Capacity Limited Company to extend agricultural insurance to farmers across a number of member states in sub-Saharan Africa. And both were highlighted by Baobab Insights as part of the top 50 insurtech companies to watch in Africa. So we're certainly in very good company. Pranav's work in particular has looked at agricultural insurance and alternative distribution models, and quite importantly, mobile as a technological enabler. So welcome to all three of you. I should also mention that for this session, I'm ably assisted by Cara Norton, who is a project coordinator for the GSMA's AgriTech program in London, and Asier Ashutegui, who is a senior manager for the microinsurance network based in Luxembourg. I should also mention at this stage that I'm very grateful to Munich Re and the microinsurance network for facilitating this conference and making it happen online. I know we've all been lamenting about not being able to go to Jamaica, but this is certainly very good to have happen. And I'm hopefully relying on my own and everyone else's internet connections. Of course, in the case that your internet connections drop, then I'm obliged to read out T.S. Eliot's What the Thunder Said. I hope you all like poetry. Before we continue, I'm obliged to take you through a few customary housekeeping rules. So, as you are probably aware by now, this session, like all others, is scheduled to last 90 minutes, which includes a Q&A session. To ensure the highest quality of experience, all participants have been muted. You can submit questions via the Q&A feature. Please use the Q&A feature instead of the chat box, and we will choose a selection of these to answer either during the session or afterwards if we cannot during the sequence of questions. The session is being recorded and will be made available online by the Microinsurance Network after the conference ends. And if you have any questions for the Microinsurance executive team, then please do use the chat function for this. Right. Moving on, I'd like to start the session with a brief presentation on the GSMA and our work on inclusive insurance. So for those of you who don't know, the GSMA represents the interests of mobile operators worldwide, uniting more than 750 operators with almost 400 companies in the broader mobile ecosystem. Now, this includes handset manufacturers and device makers, software companies, equipment providers, and internet companies, as well as organizations in adjacent industry sectors. The GSMA also produces the industry-leading Mobile World Congress events held annually in Barcelona, Los Angeles, and Shanghai, as well as the Mobile 360 series of regional conferences, and most recently the GSMA Thrive events, which are happening online as we speak, in fact. The GSMA's Mobile for Development team comprises a number of different programs to drive innovation in digital technology to reduce inequalities in our world. The team is singularly positioned at the intersection of the mobile ecosystem and the development sector, and as a result, stimulates digital innovation to deliver both sustainable business and large-scale socioeconomic impact for the underserved. One of the teams in Mobile for Development, the AgriTech program, is responsible for the topic that we have for our discussion today. This topic forms a key part of the program's work on digitally enabled climate resilient solutions. And to give you a bit more context, the AgriTech program's vision is to achieve equitable and sustainable food chains that ultimately empower farmers and strengthen local economies. The team's mission, or the program's mission, I should say, is to bring together and support the mobile industry, agricultural sector stakeholders, innovators and investors in the agritech space to come together and launch, improve and scale digital solutions for farmers in developing regions that are ultimately impactful and commercially viable. Now, the program does this through sharing research and knowledge on best practices, running an innovation fund, and providing technical assistance, as well as brokering partnerships. So, as mentioned, the topic at hand builds on work carried out by the GSMA's AgriTech program. And earlier this year in May, the program published a report which covers a number of trends and challenges and opportunities related to agricultural, specifically index insurance. In terms of trends, we looked at how digitization and technology has led to growth in the number of digital insurance services available to smallholder farmers. And in particular, we showed the impact of mobile technology on digitizing index insurance services. The challenges we uncovered looked at data availability, which remains a key barrier, with insufficient current and historical weather data leading to unexpected claim outcomes. Distribution, payments, and location accuracy, and I believe this was mentioned, Pranav, in your session earlier, are also barriers to scale, and we looked at how mobile can help to overcome some of these issues. In terms of opportunities, and there are plenty, we looked at how mobile network operators can improve service creation, contextualization, and service delivery. We also looked at how partnerships, particularly bundling and cross-selling, could be used to achieve scale across a number of business model approaches. Ultimately, our report gave rise to six learning points. We found that index insurance services had enabled first-time access and usage for many smallholder farmers in low and middle income countries. But we also found that despite some early promise, service adoption sometimes remains limited. We found that partnerships between insurance service providers and distributors, such as aggregators or mobile network operators, are vital for services to scale further, as well as to improve customer awareness, trust, and education. In terms of business models, business to government remains popular due to government support schemes, such as the Premium Subsidy Scheme in Kenya, as well as a number of other schemes in other countries, I beg your pardon. We did find that some providers have grown through business to consumer or business to business approaches, or even the business to consumer approach, which I'm sure Simon and Rose, ultimately when she joins, can tell us more about shortly. We've also found that mobile technology can be used for service enablement and delivery. Mobile technology is currently used for customer registration via USSD. It's also being used to determine a farmer's location via location-based services, in one very notable example in Kenya, and to provide regular weather updates via SMS. As you may already know, mobile money is already used to collect premiums and to pay out claims. That said, there remains a sizable opportunity for mobile network operators and mobile money providers to drive further growth of index insurance services. Finally, we found that insurance should be bundled, or is best bundled with loans, as this would offer farmers loan protection and an income safety net. Right, at this stage, I'd like to move into our discussion with the panelists. And my first question looks at the manner in which digitization or increased digitization has changed the agricultural index insurance landscape over the last decade. Now, I had hoped to start this question with Rose, but Simon, I'm happy to throw this to you to give us a bit of an idea of your experience on how digitization has impacted the growth of agricultural index insurance.
Sure, thank you, Rishi. Hi, everyone. So I think digitalization of payment especially has been really key. We are obviously talking about rural customers when we talk about index insurance. Without mobile and without mobile payments, the only solution was to have a dense network of point of sales, which is very costly. So I think one very strong, game-changing part was the digitization of payment with things like M-Pesa, Orange Money, all these solutions to digitize payment for populations who have no bank accounts. So that's one very strong part of it. Then there's also last mile digitalization. So the availability of smartphones, of 3G, has enabled us, for example, to collect data from the ground, communicate with our agents, digitalize historical yield records, which if anyone has worked in agriculture in Africa, they will know that it's very difficult to find digital records of historical yield. So, for example, one way we've used it is to have our agents equipped with smartphones and with 3G, 4G to collect or to digitalize data so that we can work with this data to create index insurance products. So that would be the second part, I think, of digitalization that really has changed the landscape. And obviously, then there's the whole space of data, so agricultural and weather data. So we're talking here usually of satellite data. The availability of this satellite weather data to create products is key, and there is more and more data. So there was probably already digital data 10 years ago, but the fact that we have more historical data now allows us to improve the risk calculations. We also have more precise data at a local level. There are new indexes that are being created. So, for example, to measure the vegetation density, the health of plants remotely. So all of this has enabled also improvements of the creation of index insurance products. That being said, this third part of digitalization, I don't think is necessarily the most important in making index insurance work, because the biggest problem that we see today is distribution of insurance. So I think digitalization of distribution tools is really the key game changer over the past 5 to 10 years.
Great, thanks. I mean, you know, there's a lot of good positives that you've highlighted there, and it seems like it's a lot more than what you might think as a basic sense of digitization that's gone on to help the industry grow. Pranav, I'm going to move over to you and ask you to give us your thoughts on the extent to which digitization has changed the landscape, particularly based on a paper that I think you wrote a few years ago, which we used for the report. And so I'm keen to try and understand this better from the horse's mouth.
Thank you, Rishi, and hello, everybody. See, digitization and technology is a topic that we've been trying to understand and delve more over a period of time, because the strong belief has been that this can be a basic game changer when we are dealing with a population that is not really experienced any financial services before, forget insurance, and that to a slightly complex process like index insurance. When we started out talking about index insurance way back in 2004, 5, 3, when we sold the first index insurance product in India, the only digitization and use of technology we used to talk about having automated weather stations that instead of a person going and actually taking a reading could start providing data and readings automatically. And that is where my first contact with mobile phone technology and digital technology came into being. But as time has passed, with the increasing influence on digitization and increasing variety of technology available, one big change that we've seen in agricultural insurance has been the variety of players that have come into being. So it's not just the technology per se, but the encouragement to the number of players that have come into being, not just for distribution, but also for providing technical services. What kind of technical services they provide? It's extremely exciting, I'd say, to see now technology being adopted all across the insurance value chain. So Simon referred to using data for developing better index insurance products. So product development itself is a big thing. How does this product actually reach the market? And when I say reach the market, it's not just physical enrollment of customers, but also awareness creation, education, explanations of the product, what it is all about, how the triggers progress. This entire issue is facilitated by technology, mobile phone technology, definitely because of the reach it has. And of course, the second part, and the very, very important part, I wouldn't call it the second, it's of course, like I said, it's across the value chain, has been the use of technology for loss assessments and loss verifications. Beyond loss assessments and verifications, which itself has been facilitated by the variety of data available. So moving from automated weather stations, we now have satellite data. Again, Simon referred to it. Your report refers to a lot of it. But also the applications in the NDVI images that we get, the modeling around all that entire data sets from satellites that happens, that have been facilitated to a large extent by the use of technology. The interesting part again about digitization is that the interplay between the private sector and the public sector that has happened over the course of years, and which has also led to innovations in terms of provision of value-added services for the farmers, which have tried to make insurance more tangible in the hands of the customers. Of course, you mentioned two issues related to bundling, and you mentioned issues related to combining with other services. All that has been facilitated by technologies, and we have seen growing trends towards that. So it's kind of a growing picture with more and more technological innovations coming in and more ways in which technology has been used. But let me stop here and let me see how it goes on.
Great, thanks for that, both of you. Unfortunately, Rose has not joined yet, so I can't pose the question to her. But looking at the chat and questions that have come across, there is a point made by someone called Hans, who's said here, I'm going to read this out. I'd like to challenge strongly the statement that agricultural index insurance should be best bundled with loans, because that excludes farmers who do not need loans. It is better to bundle it with farm inputs as they're needed by all farmers. Now, I think this is on the back of one of my findings, and very interestingly, Pranav, I think it was your paper that I read when I was looking at this element of the idea of increasing the improving the safety net. So I'm just going to put it out there that I don't believe there was an exclusive message on our part to try and bundle solely with loans. We encourage, of course, the bundling of a similar cache of products, of course, and products and services. But what we found is that when you have bundled insurance with loans, you get into a scenario where there is a higher likelihood of payments, a lower likelihood of default. And I wonder, Pranav, if there's something that you might want to add on that.
Yeah. So yes, there are, as in anything else, two sides to the story. Bundling prima facie has shown to be, like I mentioned, make insurance quite tangible in the hands of the farmers. And bundling, not just with loans, seems to have created this entire value for all the stakeholders. So whether it is the insurance company, whether it is the aggregator who actually bundles it, or whether it is the farmer, they seem to get some kind of benefits from it. When we talk of bundling and using technology for bundling, we don't really mean just with loans. There are input providers and inputs with which insurance can be bundled, and Kenya has great examples from seed manufacturers bundling insurance and using technology to spot where the farmer is. It can also be bundled with the output buyers who are the buyers of the farm output, and for them to provide better services to the farmers to get a better input to their entire work. Plus, of course, are the loans that have been mentioned. So it's bundling across various varieties and across various opportunities which are there for touch points for farmers to bundle and experience the benefit of insurance, and for all stakeholders to get better value from the insurance process. We certainly believe technology can be a binding arm across it. If you allow me to state an example, in Kenya, when the input providers, you buy a bag of seeds, you get an insurance slip in it. When you open the seeds, you just have to register yourself. And besides, and you are covered for insurance. You don't have to do anything else, and Simon can talk more about it. But just by where you've opened the seed and where you've registered yourself from, the mobile phone technology estimates where your field is and then tracks the progress of the seed on that field and gives you a claim if there is no rain in 21 days and the seed doesn't germinate. So it's that kind of bundling and that kind of, should I say, aggregation approach that we are pretty positive about, not just about loans, which can certainly make the entire package more expensive. We've seen that happening, but it also provides better access to farmers because we have close to, let's say, 50 million farmers in India who were essentially under the loan scheme. Of course, voluntary farmers also have a chance to participate in the PMFBY scheme in India, but more on that later.
Yeah, thanks for that, Pranav. I mean, there's another question about bundling. I will entertain that later, but I wanted to ask Simon if he had a comment to provide on that.
Yeah, so if you know a little bit what we do at OCO, I would go even further and enhance. I also challenge the fact that it should be bundled altogether. We sell insurance as a standalone product today, and it has been fairly successful in Mali, even where it's not subsidized. So farmers, when they all feel the need for securing their income, if they are explain insurance and exposed to insurance in an easy way, then it can be sold as a standalone product. We partner with mobile operators to make it available to anyone, even people who are not buying seeds from a specific provider or who are not taking a loan with a specific microfinance organization. And maybe to comment a bit on one idea that Pranav was mentioning, we also work sometimes with the buyers. So for example, we work with AB InBev in Uganda, where the brewery buys the barley from farmers, and insurance can also be included in the price that is in the money that is paid to farmers at the end of the season. So it's paid in advance by the off-taker and reimbursed at the end of the season. So that's also a model that we see work. But in general, I would say crop insurance can also be sold as a standalone. As we make this possible by using mobile technology, especially because we know that all farmers have at least access to a phone, even if they don't have their own phone.
Thanks, Simon. I think there's an anonymous question that came through as you started talking, and ultimately the question at the end is there evidence that farmers really want weather index insurance unless it's paid for by a donor? And I'm very pleased that your answers actually demystified that, because if you're selling it as a standalone service through a mobile money provider, as you are in Mali, then and you're seeing traction, then surely there is demand for it. I think there is scope to answer that question further when we talk about the increase in demand later on. But for the sake of progress, I'm going to move on to the second question. Thank you all so much for your questions and comments. Please keep them coming in, and we'll try and entertain them as we go along, of course. The second question I wanted to pose to you was to understand the impact of COVID-19, and specifically to understand what impact COVID-19 has had on the ability to continue providing index insurance services to smallholder farmers. Now, I'm going to come back to you, Simon, to start off with you on this, simply because you're in the position as a practitioner to tell us a little bit about your experience and what you've seen.
Yes, so we didn't have a lot of experience before COVID because we started our commercial activities pretty recently. But yeah, we've seen an effect of COVID. I will split my answers in two parts. First, there's selling insurance, and then there's operating the index insurance product. For selling insurance, it has, our ability to sell insurance has been partly affected. Despite having a call center, a USSD interface available from any phone, and even now WhatsApp availability, it's difficult to convince someone to sign up for insurance if you don't meet them in person. So we have normally agents that go around to cooperatives, to marketplaces, and explain how insurance works. Without this, it has been slightly more difficult. That being said, we managed to continue growing by focusing on calling back customers that we already met in person, or getting lists of phone numbers from farmers, from different partners. And while other companies had to stop their activities, we work with an insurance company locally in Mali. Their offices were closed for a few weeks. We've been able to continue running also subscription to registration of new farmers. Then when it comes to operating insurance, so operating index insurance has not been affected at all, because the claims are verified via satellite data analysis. No one needs to go on site to meet the farmers and visit fields to verify the claims. So even the roadblocks, the distanciation have not affected our activities. And I think that's a strength that we were not so much aware of. But when we think of resilience of businesses to COVID, index insurance has this benefit that it is operated remotely. Payments in our case are done via mobile money, so no need to come and collect a check or anything like this. So our business has been operating normally for all our existing customers.
Fantastic, thanks. I think the idea of selling insurance, I've heard two sides of the story. You've mentioned that it's been challenging. I've heard that. I've also heard, on the other hand, that actually for some, it's created a bit of a buzz and an increase in demand. But whether that demand has led to concrete sales staying on, I think is another thing altogether. And perhaps that's something that we can try and revisit. But Pranav, perhaps a comment from you on what you might have seen from a more holistic point of view, looking at the impact of COVID-19 on index insurance services.
Yeah, so coming from a point of view of various projects that we are engaged with, the interesting thing that COVID has done is that it has established, I would say, a case for use of technology. So I think a lot more movement towards using technology has happened. We heard about it yesterday too. It has given an impetus for rapid adoption of technology. We had speakers talking about yesterday that 3 years work seems to have got done in 6 months kind of time schedule. But that being said, as Simon mentioned, a lot of operational part of index insurance is technology based. So whether it is loss assessment through satellites, whether it is loss assessments through other methods of technology, that's taken care of. Enrollments where there is a requirement for actual face-to-face contact have seen an impact, but that face-to-face contact has actually been restricted by using various, what should I say, and I'll refer back to the word bundling, by the bundling mechanisms that have been used by various players. So whether it is the banks who have index insurance bundled with their loans, that has continued because loans, etc., have continued at its own pace, or even input buyers where it's bundled with the fertilizers and the seeds. So in that sense, I would say that we haven't heard adverse reports of the schemes itself coming down. Yes, because the schemes themselves have changed, a few of them changed from mandatory to voluntary. There have been reports of a minor change in prices for agriculture index insurance, but on sheer impact of being able to reach down, it's reached down to the farmers, except for pockets where there were lockouts for longish periods. And besides seasonal variations, we don't see too much of an issue, but it has definitely been positive in adoption of newer and better technologies in the efforts to reach out to the farmers, explain the entire process to them.
Great, thanks. I think the interesting message I'm getting here is that ultimately there has been a very positive impact, but at the same time, the realization of that positive impact hasn't been that widespread. one thing I wanted to just try and understand was whether we can expect to see an increase in the use of mobile for certain things now that the effect or the impact of the pandemic is a little bit more understood, and perhaps the importance of technology also is a lot more acknowledged, and certainly felt a lot more widespread. Do you think that will ultimately make a difference in the months and perhaps the short to medium term to come? Happy to start with you, Pranav, if that's okay.
Okay. Rishi, let me take a slight step back on this, because in the agriculture sector, technology, and especially mobile phone technology, hasn't really been just used for crop insurance and farm insurance. It has also been used for livestock and especially cattle insurance. And I guess there are some lessons that have been learned from their sector which can actually be useful as we develop our processes for index insurance in the months to come. So we've experimented with projects that have definitely used radio frequency identification devices for identification of cattle. But more than that, we have also experimented by use of mobile phones for cattle identification, insured cattle, and then comparing them with at the time of mortality. So taking up features like interpupillary distance and interhorn distance to identify that it's the same cattle that have been. So I guess if you try and draw a parallel to it in the times to come, so it basically leads to the fact that technology for its own sake does nothing. It's actually what you do with it that will make a difference. So given the fact that now you can actually have, I mean, you are already using enrollment applications on the handsets. There are applications that allow you to carry out surrogate cost-cutting exercises on the phones itself, which help with area yield index insurance. So, and so on and so forth. I mean, if you give out an RFP for use of technology in agriculture, you will have, 10 applications in 10 minutes kind of a situation. So there is a plethora of work that has been done on innovating with technology and using the same technology in different ways on the field. So I think we've just scratched the surface as of now on using technology in the times to come. And I guess as we move forward, there will be more and more innovations available that can help implementation organizations such as Simons and others to actually make a difference on the field. So I would keep this on a very positive note that the impact will be positive in that sense.
Thanks for that, Pranav. Simon, a comment from you perhaps on this?
Yeah, I think it will be quite short, but I don't think that that is really the barrier. Like the barrier has been lifted here. These customers that we're targeting are kind of mobile first. The use of digital channels is quite obvious to them because they are not offered insurance on a physical way, on paper very often. So I don't think it has made the digital channel that much more obvious as a way of distribution. I think it was already quite clear that it had to be distributed via mobile, via SMS or through mobile money. So I don't think that COVID has really shed a light on this from the consumer perspective, maybe more from the insurer's perspective. So insurers have realized that they couldn't necessarily open their point of sales, that they have to keep customers engaged in different ways. So maybe a call center, maybe through a chatbot. So we see a shift in priorities from operators to accelerate their digital distribution and connectivity with end customers. And I think that's more where things are going. In our case, we started from the beginning with a digital experience. We now recently launched a WhatsApp chatbot, so that customers, even when they are not literate, when they cannot read, they can just interact through voice note messages in their own language. So yeah, the fact that customers are remote, they are often illiterate. This all means that digital was the way to go, because then you can do rich media, you can do videos and audios, you can reach them remotely. So I think it was already obvious before COVID.
Yeah,
Rishi, allow me to add one thing to what Simon has said in this extension of services. This entire issue, I mentioned it under value-added services, but this entire issue of providing a better experience to the customers, I think the mobile phones technology have played a big role. Not only have we experimented with weather forecasts being provided to insured farmers on their mobile phones, but also to get over the literacy barrier, voice messages that go down to farmers in providing forecasts, and not just forecasts, but giving things like, okay, it's going to rain in the next 3 days, so you can look at sowing in the next 3 days, or it's not going to rain for 7 days, so please delay your sowing for 7 days. So in that sense, it's become more user-friendly. Yeah. And like very rightly was mentioned in the first stage by you itself, that insurance is one part of the service that goes to them, but it builds a bond between the provider and the farmer, and trust is of primary virtue, so it helps in the entire process of building trust and demystifying the entire issue around that.
Yeah, absolutely right. I think, we've talked about this a few times. I think it's been mentioned a number of times in publications and various other webinars and fora, but trust is important. That's why you find a scenario being repeated where partnering with a mobile network operator, often who have well-known, well-established, and in many cases trusted brands, as a way of putting your product out there. You mentioned literacy and improving awareness, and there's a question from Jimmy Loro. I'm going to just quickly entertain this, and then we'll move on to the next question. Looking at the low education that smallholder farmers potentially have, and the fact that many are generally below the poverty line. The question he asks is, how do service providers or product designers ensure that farmers understand the features and the purpose of index insurance products, particularly when limited by the medium through mobile phones? So the interesting thing I would say there is that our report already goes into a number of very good examples where providers are trying to improve awareness and education, not only as at the point of signing customers up, but as a continuous exercise as well. One personal experience that I found quite interesting was what is being done in Zimbabwe between the Zimbabwe Farmers Union and EcoShore, where the tie-up works in quite well. You'll have agents working for the Zimbabwe Farmers Union going out and carrying out mass sign-up events, but at the same time providing advisory and guidance on what this is and how it works. That touch point remains because of the interaction that the ZFU wants to have with its members in this case. And so that's a model that's often worked as well. Simon, you talked about robocalls or IVR as we call them, and often we've heard of this example not only in your case, but also in a couple of other cases as well. So the model that is being employed using that and call centers to try and reach out to customers is working as a means of trying to provide awareness and education on how this service works. But ultimately, at the end of the day, from what I imagine and what I gather, is that the best education is the experience itself. You sign up, you receive a claim payout, and you understand how it works, and you're more likely to sign up again. Right, I'd like to move on to the next question, unless either of you gentlemen have a comment to make there.
So quickest comment that I can make on this, and basically you said you need to experience a claim, but what are you getting? Are you getting $50 for what are you getting? Or are you getting $500 for what are you getting? Still needs to be demystified. So technology is great, mobile phone is great, but it still needs to be demystified. So one of the best examples of consumer literacy has been color coding of index insurance. So if you tell a farmer that 35 mm of rain, it may or not mean anything to him. But if you say you are now in the green zone and then you're moving to the red zone or moving to the black zone. He's able to identify it, and then you can kind of keep feeding in the information that, okay, you are currently red, so you may get a claim. And if you are in black, then you'll get $50 as claim. So that kind of thing has been done very effectively in the index-based livestock insurance program in Kenya. And I think such things are what overcome the literacy issue and understanding issue from the customer's perspective.
Yeah. No.
So it's a combination of technology and what you do with it that actually makes a difference.
Absolutely, absolutely. I'm going to move on to the next question that we've got, and I can see there's a number of very good questions coming up, and we will try and entertain all of them, of course. The next question that I wanted to ask you guys, and this builds on something that you mentioned, Pranav, in terms of, oh, actually, sorry, Simon, you mentioned in terms of the consumer perspective for index insurance is sometimes lacking or missing in this case. What I wanted to try and understand is you have a scenario where Hospi-Cash or health or funeral microinsurance services have grown really well in a number of parts of the world. And they've grown faster than agri-index insurance services. But why is this? What's led to a scenario where you're seeing certain types of products prosper while others are still trying to find their feet?
So I know this pretty well because I used to work for Bima, that is very well known by the network, I guess, who has been very successful in distributing live and Hospi-Cash microinsurance services. To me, it boils down to one main reason. It's the difference in terms of target audience. Live and Hospi-Cash products can easily be scaled by targeting urban citizens. So you can have agents in stores in busy locations. You can call these customers and they usually have network coverage, they have battery on their phone. They're also more literate, they have better understanding of insurance. So I think all this makes it much easier to sell these kind of products than crop insurance. Rural customers are more difficult to reach physically, but also over the phone because they might not have network or not have battery on their phone. They have never heard of insurance, most of the case. They're often illiterate. They need to trust, they have also a state of mind and mentality where they need to trust the people that comes and sell insurance to them. So all this makes the sales a bit more difficult. I often hear that people saying that life insurance is easier to sell, and I kind of disagree with this because the concept of life insurance is quite foreign to many people. It means that you need to trust someone that they will pay your family when you're not there anymore to verify it. So I think it's not due to the product itself. A crop insurance product is very material. Most farmers have experienced a bad season in the past 5-10 years, and they know they need something to help them in that situation. So I don't think it's because of the product itself, but it's really more about the target audience and the specificities of this target audience.
Pranav, something for you to add there.
Yeah, let me take a slightly different point of view from Simon. I fully agree the type of customers are different, but I do feel that the product is different in terms of the simplicity of the product itself. So what have we seen on mobile-enabled life insurance has been a linkage to the renewals that you do, or how much of services do you load onto your mobile phone and then linked with it for the insurances linked with it. So, and the duration for that period. So whether it is for 1 month or 2 months, but it's essentially short term. Agri-index insurance is slightly more complex in the way it works. So, and the massification that happens with mobile-enabled life or hospital cash may not be the same. The same massification possibilities may be different as far as agriculture index insurance is concerned. There is a certain amount of value from the product itself and certain amount of customer understanding and customer ability to respond to such products that can also impact. So also the fact that what we've seen in mobile-enabled life and hospital cash insurance has been a lot of emphasis that has looked at it And pardon me from saying so, looking at it from the point of view of the MNO, rather than and I shouldn't say rather than, but looking at it more from the point of the MNO than the customer's perspective directly. So it has been used by MNOs as a churn prevention strategy or increasing their own ARPUs in that sense of the term. Whereas they do not see so much value in bundling agriculture index insurance services, which may be targeted at few specific people rather than the mass customer base that they can go to. So I think the approach has been slightly different. We've often heard the statement being made that try and solve the distributor's problem, and if the distributor's problem is to extend the life of a customer on his mobile network, then obviously the approach is different from ensuring the risks on the ground and in the fields are getting covered. So that's my 2 cents on it.
Look, I think, you know, you've got a very good idea there of some of the issues, both of you. But I'm going to play the devil's advocate. And I want to say that, yes, I do appreciate that there is an understanding, or there has been historically an understanding of using insurance as a way to reduce churn, of course, and to increase your ARPU, which is average revenue per user. But aren't we beyond that? I mean, that is something that came in very early on when insurance was a bit of a novelty and treated very much like another value-added service for a mobile network operator to provide. We're now seeing more complex or perhaps more comprehensive products which are not contingent on you having to top up a certain minimum amount to get a small amount of cover. Rather, we are seeing in certain instances, for example, in Pakistan, even in Kenya, where you can pay a premium upfront, but of your own volition via mobile money to get cover. So surely it's a little bit beyond the idea of churn reduction. And why is it that that is working for Hospicash or Health more so than it might be for Agri? It is working for Agri to some extent, but it seems to me, or it seems from the work we've done, that it's working a lot more for Hospicash or Health. Happy for either of you to take that, if that's okay.
Simon, you want to have a go first? Because I have some thoughts on it.
Go ahead, I don't have much to add.
Okay. So I think, Rishi, what's happened, and I'm open for being contradicted on this, is that what enabled the initial, let's say, the free product or the add-on product initially, what it did a great job, and hats off to everybody who did it, is that it kind of gave the insurance experience to many people. People who had never experienced insurance got a feel for insurance. If there was a claim, you yourself said, if you get a claim, you get a better experience. So having experienced that, we moved to the freemium part, that you paid a part premium to get into a higher coverage. And now, having experienced both of them, we've now reached a stage where people, as you say, are making payments up front. And the mobile supplier itself has facilitated it by whether it is payment of premiums through airtime or whether it is through mobile wallets. So these additional services that are there have facilitated entry or staying on to a particular service in that sense of the term. I think, as Simon mentioned, the agri-index insurance customers are still at a slightly different level of understanding of insurance and what they want to get from insurance, plus the factors of the premium price being very different for an index insurance product. I mean, a 10% insurance cover you cannot compare to a 1% life insurance cover, and such stuff is very, very different in that sense. And if you have to pay a 10% premium through your mobile phone, your renewal that you do or the recharge that you do goes up to a higher number. So I think there's that essential difference in the product offering itself and understanding of the product difference itself, plus the duration for which mobile-based life insurance and hospital cash services have now been there, which has led to a far larger understanding in the minds of the customers. Let me stop here.
Simon, happy to receive a comment from you if you've got one.
Not much more to add. I think that covers most of the question. On the question of maybe the simplicity of the product, I think that's indeed key. But it's quite easy to understand a crop insurance product when it's when it's an index-based one, because you can tell, okay, that's the level of rain that you need to experience to obtain a cover or not. We also keep the customers informed along the season. We're sending them SMS on the rain observed versus the trigger. So I think that helps building the understanding of the product. Working in life and health insurance before, it was also quite difficult sometimes to explain what is covered, what is not, why are there exceptions or exclusions. I think microinsure is doing a good job in removing all exclusions, but it's quite difficult to negotiate that with insurers in general. So yeah, the index insurance products are pretty straightforward. So that should help making them more widespread.
Great, thanks for that. I do have a follow-up to that, but I'm not going to ask it in the interests of time. We're enjoying ourselves with these questions, which is great. But I do have to get through my allocation, I'm afraid. So I'm going to move on to the next question. And it wouldn't be unfair. It would be unfair sitting here as a representative of the mobile industry and not ask a question related to mobile network operators. So I'm going to do just that right now. So my next question to you gentlemen is to try and understand a little bit more about the partnerships with mobile network operators that have worked so far, either from your experience or from what you might have observed. And also just to add a little bit of spice to that, to try and understand which business model approaches have worked well for partnerships that have worked with mobile network operators. So slightly tricky question in that light. Happy for you to break it down and answer it however you wish. Pranav, would you like to go first here, or Simon, would you like to go first? Happy either way.
I think Simon's in it, so Simon, go for it, then I'll add on to it.
Great.
All right, so that's kind of also our focus at OCO is to be really mobile first and to partner with mobile operators. So I have a bit to say here. First of all, our experience is that integration inside the mobile money menu of operator has had a huge impact. We were featured in the homepage of the mobile money menu of Orange for a few months, and that gave us more visibility than any other marketing campaign could have done. So that's from our little experience so far. That's already a key element. So what I've seen as well is bundling. We talked about bundling with seeds, with microloans, but there's also the possibility to bundle insurance with mobile operator products. For example, MTN is doing these bundles called Recharge with Care, Recharge with, or Send with Care, where when you recharge your phone or when you send credit to your friend, you also credit a bit of insurance, give them an extra insurance in the same process. So that seems to have been quite successful. The other more traditional way to bundle insurance, to include insurance for a mobile operator, is the microinsure or Bima way, where customers can use their airtime, or the airtime is actually deducted from their credits every day or every month to pay for the insurance premium. And that has worked obviously because Bima has somewhere around 20-30 million customers, and microinsure also counts in tens of millions. So these kind of partnerships have worked. Now for agri-insurance, I see two ways mobile operators can integrate this. So it's usually not seen as a standalone product. It's part of a larger strategy. It can either be a strategy to become a relevant financial player, in which case crop insurance can appeal to many rural customers, but it's usually part of a suite of other financial services like microloans, savings accounts. So yeah, it can fall under the mobile money strategy. Or it can become a strategy as part of becoming a farming partner, in which case insurance can be integrated to a larger offering alongside farming advice, weather alerts, maybe a marketplace. And we can see some operators going into that direction of offering a variety of agri services, and then insurance can be one of them. So there are these two potential ways to integrate insurance as part of your strategy as a mobile operator. But I would like to add that operators don't necessarily need to be involved in insurance, but they can also just provide the enablers, so provide the right tools for insurers to create a service. So it could be that as an insurance, you need a few things like an API to connect with mobile money payments. You need, for agricultural insurance, you need weather data. You need geolocation. So what mobile operators can do is provide this, for example, this API, provide weather data by having connected weather stations at the tower at the base of the towers, at the base towers. They can provide triangulations to provide an approximate location when farmers don't have GPS. What else? They can also provide special plans or tariffs for IoT devices, because we see a lot of these sensors that are now becoming part of precision agriculture. So if they can try to promote this by having specific machine-to-machine plans or attractive plans for this IoT, Internet of Things, connected devices, that could also help. So it doesn't need to be part of a clear strategy. It can also be just bringing together the different bricks that will make the environment more friendly for an insurer that would want to launch a service.
Thanks for that. I mean, there's a couple of things there that really struck a chord with me, and I do regret that Rose is not with us at the moment, because one of the very interesting examples we have in our report on a kind of partnership that we have between insurers and a mobile network operator is what is happening in Kenya with Safaricom, Pula, and Acre Africa, who are working together to provide an area yield index insurance service with different elements of the insurance value chain being managed by both Acre and Pula, while Safaricom, through its DigiFarm platform that has signed up, that has got 1 million farmers registered, provides a bundle of services that are relevant to smallholder farmers as they begin each agricultural cycle. So being able to take out loans to then buy seeds from verified suppliers, to organizing logistics and potential buyers, and having insurance there really as a safety net, as a form of collateral. So it's you talked about an M-Agri suite of services, and I think that's the one example that comes to mind that I think is very interesting, and it'd be interesting to see how it continues to progress as well.
Yeah, also that's a good example. There's a less good example, unfortunately, from Zimbabwe with EcoFarm that
Indeed
included insurance at some point, but I think it didn't succeed. So there's also Econet has also been pushing in that direction. I think Orange now has a strategy to develop more M-Agri services as well. So let's see how it evolves. But I think that's it's always good for us that the operators start to look more at their rural customers, because they will need crop insurance more. It's a relevant service to add to this kind of suite of services.
Yeah, without doubt. Pranav, anything for you to add there?
Yeah, I think Simon and you have laid out the ground pretty well. We want to be brand agnostic and not for any specific MNO, but we want to look at it from more the insurance perspective and the customer's perspective. So I would not like the MNO services. I mean, of course, MNO services are restricted. If Safaricom is offering a service, can customers who don't have Safaricom subscriptions, can they use the service? That's the big question that we want to ask. And so I think we'd like to look at models emerging that would perhaps work at various points across the insurance value chain. So what is the data that emerges from MNO operators that can help in better product creation? What is the feasibility of payments through the payment channels that premium payments can be facilitated? What is the feasibility of enrollments being facilitated? What is the feasibility of assessment processes being undertaken on the ground that can be facilitated? So there we look at the mobile service as a whole rather than specific MNOs. But you're right, for MNOs to have a business model, they need to kind of focus on particular aspects of this value chain and then build on it. So such kind of services where they are able to become enablers for any of these customer touch points that I mentioned would certainly aid in the insurance programs to be facilitated on the ground level. And the kind of partnerships that can be done, I mean, we've been seeing examples of various kinds, but there's also been this big movement towards MNOs not being considered insurance providers, but as facilitators for the insurance process. So against a scheme which said, I've bought life insurance from such and such operator, it will be that I have used such and such operator to pay premium for my agriculture insurance product. So that's the movement that we see happening, and it'll be good for the industry as a whole.
Yeah, I understand the nuance that you're making there. It's a question of who you're buying it from and who you're actually buying it from. A couple of very interesting points there. And I always find this question one of the favorites every time we have this kind of discussion. But you talked about enablers for certain elements of the value chain, and of course, I think there is a lot more awareness in terms of what mobile network operators can do. We cover this in our report as well. Going back to a couple of things you mentioned, Simon, as well. Location-based services are certainly exist. There is a very good example of Acre trying to do that in Kenya. And so there is something being done about it. It's not exactly a complete case of, well, we have no idea where the farmers are, so we can't actually figure out what the loss assessment might be. That is something that's being improved upon. At the same time, and certainly as you see an increase in a steady increase in penetration of smartphones, which of course I'm sure people will find ways of disputing when it comes to rural users. That obviously helps when it comes to location-based services. But the example I'm talking about is extremely basic, using triangulation through base stations. And at the same time, talking about the IoT connection, Simon, I think there is a very good example where Dialog Sri Lanka have a number of automated weather stations, and using Idea Mart, they have basically been able to connect these and provide localized weather forecasts for certain parts of the country. Which is of course is useful for an index insurance service as well, as you can imagine. You made a very good point about APIs. Now, the mobile money program within the GSMA has an inclusive finance lab, and part of their work is to look at facilitating a single gateway to provide services through mobile money providers. So I think these are things hopefully that we'll be able to talk about in a bit more detail, given a little bit of time as well. Any further comments from you gentlemen on this before we move to the final question that I have, at least? Great, okay. The final question from me would be to try and understand a little bit more in detail how mobile can be used to grow index insurance services further. So I think the tone of what I've heard today is that there are some good things being done. There's still an opportunity to do more. Perhaps there's a few things that we can learn from the way Hospicash is being sold. And initially, when I had this question in my mind, I was thinking about it solely from a technological point of view. But of course, as we discussed in our rehearsal, that unfortunately doesn't allow you to take into consideration partnerships. So I'm interested in your opinion, both from a technological point of view, from a partnership perspective, and any other method or any other way you think mobile can be used to try and scale index insurance services further.
Should I start?
Please go ahead, Simon.
So yeah, if we put aside the distribution and payment via mobile, which are really, I think, one of the key elements to bring index insurance to more people, there are a few things. I already mentioned some of them, but yeah, mobile weather stations. So having, as you said, for Dialog Sri Lanka, having connected mobile, having connected weather stations could help. It's not directly mobile, but yeah, it's mobile technology still. There's also this topic of passive microwave rainfall detection that has been around for a few years. We haven't seen really it being used operationally, but that's a way that operators could provide useful data to the insurance companies. IoT, so maybe promoting the way mobile operators today in cities promote IoT devices like, I don't know, wristbands or home appliances. They could also play a role in distributing IoT devices for farmers, and then this can have strong synergies with insurance, because the more data we have, the more precise the data, the more services we can provide. So these are a few ideas that I can mention. Beyond that, there's always it's not really technology, but it's more of a commercial topic, that expanding network coverage. So expanding 4G to more areas, or even just 3G to more rural areas. That can be done through new technologies, but yeah, that's not revolutionary, but that's a point. And also reducing the cost of data, or finding new ways to charge data could be another innovation that can help. By that I mean some services that have a strong social impact, such as providing weather alerts, for example. I believe there's a case in making them free or discounted with, for example, white labeling, or how is it called again? You can have different it's deep packet inspection, so you can basically price differently some kind of data. So I think mobile operators could use this kind of technology to promote services that have an impact in financial inclusion, in climate change resilience. So it is kind of a back-end technology, but I think that could also help in promoting or expanding the reach of this kind of insurance schemes.
Yeah, I think the word you're looking for there is zero rating data. And actually one thing I can tell you is that a number of different regulators in a number of countries have put into place fee waivers as COVID-19 has hit the various the world over and their population specifically, to try and limit the amount of the fees that you pay for mobile money transactions. Now, whether this applies to data as well, I couldn't tell you off the top of my head, but what I can tell you is that while I think in principle it is an interesting suggestion, it needs to be balanced against the business model element of mobile network operators. And this is the question that we find ourselves trying to answer every single time. How can you get the maximum social impact whilst also ensuring that the business providing this remains sustainable, of course? Pranav, over to you.
Yeah, so Rishi, I would remain on my theme on the agriculture value chain and what can be done in improving this entire services offering. So there are experiments that are being done and giving initial results. We've had some interesting experimentation that has helped in growing index insurance services through training through the mobile phone. So we've always talked about making the customer aware, making the people aware, education of customers. But one very important aspect of this entire process linked distribution is how well aware and how well do the people who talked to the final customers, so the channel partners, their sales force, the loan officers of institutions and financial services providers, how comfortable are they with the product itself and what do they understand with the product? So we have had experimentations where our partners have done remote training of their sales force, because obviously getting them into one room is an expensive proposition periodically. So once the initial training is provided, product training is provided, all updates, refreshers, everything else about the product is communicated to them through their mobile phones. So the receiver, there's a small quiz that they need to take. If they need to get into a refresher, their supervisor can actually do a one-on-one thing. So I think training on mobile phones can actually help in translation of it on the ground level and making it simpler on the ground itself, which is an interesting exercise that I think is one of the next steps. The other thing that has been done is, I've talked of the loss assessment process a couple of times. So the loss assessment has essentially been done using satellite data and measuring of rainfalls on the ground, whether it is mobile stations. One interesting experiment that has been done is through photo-based loan settlement. So once a crop is grown, same crop, same location, same parameters. Pictures are taken periodically over a period of time and fed into a central server so that there is so that you can track the problem with the crop, take remedial action, as well as give a payout as and when it gets triggered based on the image that has actually come to you, which saves a lot of problem on the ground. So there are large CGIAR experiments on this, which I think is a good step, which combines the overall so-called remoteness of index with actual ground feasibility operations to bring about some positive output. The other thing that I feel mobile services can be used is how can they be used in containing what, lack of a better word, let me say, fraud containment. So how I talked about it with reference to agriculture insurance, with reference to cattle, that it is you're actually paying claims for the actual cattle and identifying the cattle. Similarly, can we use mobile phone technology and mobile itself to prevent, I would not say wrong claims, but unhealthy claims being paid out? So can they be used for, you mentioned geolocation services, so can they be used in identifying the crop and the location that has actually been insured? Can they be used when identifying the actual stage of growth of the crop for which the insurance claim has to be given? So how can it be used for wrong claims being paid out and actually enabling trust by payment of right claims? So these are a couple of areas where we can certainly look at. And you mentioned the role in for the partnership aspect, and certainly mobiles, you can't translate it on the mobile phone, but they can certainly help in the obvious communication and transfer of data from one part to the other. And I may have one thing to say about data and technology, if you permit me, but let me stop here and respond to. Yeah.
Well, I was going to say I'm happy for you to continue if that's okay. We still have a few minutes.
Okay, so this thing about, I mean, data is important, and data is important not only for agricultural insurance, but also for various kinds of insurance programs, and index more important in index. But when you look at data and combine it with technology, yes, technology can aid in provision of better data, it can help in better modeling, etc. But we need to break it up, and we need to examine how mobile phone technology can help, because I've had this favorite 4A theory about data and technology, that it needs to be available first. Then not only available, it needs to be accessible. And if it's accessible, it needs to be affordable so that more people can use it. And then the accuracy of data, as well as accuracy in terms of implementation and how well the results come out. And if you look at it, we can combine it with what you call fair practice. So the fair is availability and accessibility are there, but the interoperability, the I of R, so the interoperability and the replicability of mobile phone services is, I think, fairly critical to help in the growth of agricultural insurance and index insurance on the ground through mobile phone services. The data sets need to match, and not only do data sets need to match, the mobile phone services of one operator needs to talk to the services of system of another operator for it to be actually enabled in the ground. Otherwise, there is a danger of it being limited to one service operator or to the other service provider. And so I think I'm pretty much enthusiastic about how the interoperability and the replicability aspects of technology can actually further the entire game on the ground.
Yeah, you mentioned something very interesting earlier as well that I picked up on, but I forgot to respond to, which was about one of the issues around having a platform like Safaricom. I managed to mute myself finally after so many webinars I've done what everyone has done. But I was just going to say that the example you had of Safaricom, unfortunately, only being open to Safaricom customers and creating an issue where if you're on a different network, then you have a bit of a problem. The thing that we've seen there is that when you have the kind of market share that Safaricom has, where they're trying to promote uptake of their services, then the challenge is not so much for the consumer, but more so for the other providers, which is a whole different ballgame in itself. But I do appreciate that we are seeing a number of services that are trying to remain network agnostic and trying to provide their services in a way where it doesn't matter which network you're on. The difficulty is that when you are a nascent service, you start off with someone else because you hedge on their brand loyalty, and then moving on from that is potentially the next challenge, which hopefully will be something that we'll be discussing in a year's time or a couple of years' time. But yeah, no, some excellent observations, and thanks for that. I don't know if you've got anything to add to what I've just said about Safaricom there.
No, my issue was not Safaricom or anything. All I was saying was that if it is one service provider providing the service, what happens to the others who are not on that network? So that was the issue that I was trying to bring about, and that's why I'm coming back to the issue of interoperability. Yeah. Yes, if you have majority market share, you may as well leverage it, and it will be to the benefit of most of the customers in that sense. So I've been repeatedly saying that I'm brand agnostic, and at the ILO we want to be brand agnostic and look at the services from the services perspective rather than one or two service providers. But yeah, that's the point that we were trying to make, and that's why I feel this entire issue of replicability and interoperability, plus keeping it affordable, both on the supply side and the demand side, are of critical importance in having it grow in the times to come. And that's where I think innovation will also come in. So your point about partnerships is, of course, can the government and regulations be a facilitator for those kind of innovations and those kind of services to be introduced? Can mobile service providers be a kind of a approved distribution channel for agriculture index insurance? Those are the issues that need to be looked at in its entirety.
Thanks for that. I appreciate it. I recognize that we've got less than 10 minutes left. So I wonder if we can take a stab at a couple of the questions that have been asked there. I can wrap things up and then hand over to Dirk. So let's have a look. I do apologize to the audience if we can't answer all your questions. As you can see, we've been enjoying this rather lively debate, and so have you from the number of questions we've received. So we'll try our best. And I'm going to pick at random if that's okay. Right. So Pranav, we have a question from someone called George Brady. And I'm going to ask you this because you ran the last session on public-private partnerships. To what extent does the success of deploying new technology in insurance, how has that enhanced the involvement of the public sector? Or how has that been enhanced by the involvement of the public sector?
Great. Thanks, George. I am happy that some of the issues you brought up in the first session are getting highlighted now. So the public sector, and we also ran an audience poll, can play a huge role in various kinds of activities. And we talked about data supplying in the first session. We do believe, and that's the point that I was making earlier, that we need some kind of support in making services more widespread and more, as we say, agnostic in that sense. So can we look at having technology innovations as a public good? Can we look at data as a public good? I wouldn't say in technology itself as a public good, but at least the data that is generated from the technology as a public good. Those are the issues that the public sector, whether it is funders, whether it is the government, whether it is other players in the market, can support the private sector with. There is a cost involved to technology. Can those costs be subsidized, if that's the right word to use, by the public sector in that sense? Can public funds be used in experimenting and finding answers to deployment of new technology? So I think the public sector has a biggish role to play in at least fostering and supporting these innovations till the time that they can become sustainable on their own right. So to use crop terminology, planting the crop is important. Using the velvet glove of the public sector is the way I'd like to put it. But that's not to say that private sector doesn't need to innovate on its own. Huh? They still need to do the innovation. Yeah.
Absolutely. Just looking at one or two of the other questions. So Pranav, you've talked about fraud, so I'm not going to bring that question up again, unless you're happy to talk about it again, of course. There's only time for one more question. And I think there are a couple of questions about subsidies. So I'm by my sense of fairness, I'm going to pick both of those questions and try and see if we can answer both of them together. So one of the questions again from, bear with me, sorry. One of the questions from Cedric Herman, it looks at whether there are agri-insurance services where the premium is subsidized jointly by the government and by seed providers. If there are examples of that you're able to talk about. If not, that's fine, because the second question is quite interesting, where Khalid from Bangladesh asks whether it's possible to scale up index insurance without government subsidies. Now that's an interesting question for you, Simon, I think.
Okay, so I'll take this one, and now you can answer the first one maybe. So that's the goal, because we know that subsidies are not available in all countries, and the farmers we see are still keen to have insurance. So there's always a way to price insurance in a way that is affordable. The issue is then the value for money, because if you pay a lower premium, then it's going to reimburse you only in catastrophic situation, and pay you back less often. I think a first step would be for governments to remove taxes on insurance, because it's an effort that people make to have themselves a safety net. So I think it should be encouraged rather than penalized. Interestingly, there are also challenges that come with subsidies, because when the government pays a part or the majority of the premium, then there's a higher risk of fraud. Meaning people could try to benefit from insurance, because in the end, the ratio of the payout ratio will be favorable to them if they only pay 20% of the insurance policy, but receive 100% of the payouts. So we see also that when there is a subsidy, it comes with its own challenges of, for example, maybe being sure that people already indeed own the land, and they effectively had, when they say they have 4 acres of land, they have 4 acres of land and not 2, so that they cannot benefit from the scheme. So although subsidies are great and they help provide better value, they help also make crop insurance more understood and trusted. I think it's important as an industry that we make the case that without subsidies, it can also work, so that it can be promoted to more places, more countries, without waiting for governments to take a decision there. Maybe a last point is that we still see governments trying to create a guarantee fund so that they could pay out compensation to farmers in extreme situations. So I think there's also a case in promoting the other approach, which is subsidizing crop insurance rather than trying to have money available in case of disasters, because then it's becoming less political. It's also optimized so that it's paid automatically and not you don't need to wait for a decree or a decision from the state. So there's many things to say about subsidies at limited times. But
that's fine. That's fine. I'll have to move you on, I'm afraid, Simon. Pranav, 60 seconds for you to wrap up.
Me to wrap up? Or
no, sorry, for Pranav, sorry. 60 seconds if you've got anything to add. I beg your pardon.
So subsidies is an interesting topic. We can spend the entire 60 hours on it, so let me not get too much into it. But the fact remains that mobile phones as a whole, there is a role for smartness in subsidies. So is there a way, how can we use the infrastructures available by the government for better services? Is there a way we can use the extension officers and increase their capacity to deliver better services on the ground? Because there is an available infrastructure that can actually be serviced. And if we can use that with mobile service operators, their distribution strengths, educate their distribution channels in translating this for the customers on the ground, we can be on a far stronger wicket, because we do believe that mobile network operators have a huge distribution strength that needs to be leveraged for products within communities themselves. Let me stop here.
Thanks so much for the cricketing analogy. That doesn't go unmissed when you talk to me, of course. I thank you very much, gentlemen. Unfortunately, we're almost out of time, so I'm going to quickly try and wrap up. A few of the things we've learned today is that digitization has been very instrumental for different parts of the agricultural insurance value chain. Digitization has also brought in a variety of players, which wouldn't have ordinarily happened otherwise, and has improved awareness of insurance, index insurance, and education. While COVID has been ongoing, it has been slightly challenging to continue selling index insurance, but digitization in place has enabled operations to continue. And I'm going to use your analogy, or your something that you said, Pranav, where you said 3 years of work has been done in 6 months, and that's fantastic, of course. A couple of other things to mention is that certainly it is possible to bundle, and there are two ways of doing this, Simon, as you mentioned. One is to bundle insurance as a suite of financial services. The other is to bundle insurance as part of a set of agricultural products and services. And Pranav, you mentioned something interesting, that the role for mobile should be to try and continue serving as an enabler for different elements of the value chain. And I think a couple of things that you've also mentioned there is that how can regulators and governments work together to try and offer the incentives for private sector players, mobile network operators in this particular case, to continue to innovate and incentivize, be it through zero rating, for example, or improving coverage. And at the same time, how can we look at mobile? How can mobile be used to avoid fraud? These are interesting things, and certainly things I've noted down if we're running another session again. Finally, I just wanted to add apologies on Rose's part. She couldn't join us because of a scheduling mix-up, and she does send her apologies. And at this stage, I'd like to hand over to Dirk to wrap up. Dirk, I'm very sorry we're a minute over time, but the floor is all yours. And thank you very much, gentlemen.
Thanks to everyone. Thank you for this very interesting session. No need to apologize. Simply the teams behind these online sessions are very much under stress, and they need a break as well. So I would love to invite all of you now to go to lunch together, which we can't, unfortunately. But I hope you'll be back this afternoon at 2 p.m. with a session where we will be discussing how to use the different layers of insurance against climate risks, macro, meso, and micro, how to combine them so that the low-income market actually gets good protection and reliable protection. Again, thank you to everyone, and see you this afternoon. Bye-bye.
Thank you. Bye-bye.